You've made the big decision to invest in your education, and you know you'll likely need student loans to help make it happen. But the application process seems like a maze of forms, deadlines, and confusing terminology. Where do you even start? Is it just one application, or are there several? And how do you make sure you're not leaving free money on the table or making a costly mistake? If you're staring at a blank FAFSA form or wondering about the difference between a federal and private loan application, you've come to the right place. This video is your definitive, step-by-step roadmap for applying for student loans. We're going to break down the entire journey into simple, manageable stages. We'll cover the crucial first step that unlocks all federal aid, how to interpret the financial aid award letter your school sends you, the specific steps to accept your federal loans and when, and how to consider a private loan as an absolute last resort. My goal is to make you feel confident and in control, ensuring you secure the funding you need while borrowing as wisely as possible. Let's walk through this together. The single most important application you will complete for college funding is the FAFSA, which stands for the Free Application for Federal Student Aid. This is not just a loan application, it's the gateway to the entire financial aid universe. By filling out the FAFSA, you're applying for federal grants, which you don't have to pay back, federal work-study programs, and of course, federal student loans. But many states and colleges also use the FAFSA data to award their own grants and scholarships. So, even if you think you won't qualify for federal aid, you should still fill it out. It's free to submit, and it could unlock thousands of dollars in free money. The first pro tip is all about timing. The FAFSA opens on October 1st for the following academic year. For example, if you're starting college in the fall of 2024, you can file your FAFSA as early as October 1st, 2023. Do not wait. Many financial aid is awarded on a first-come, first-served basis. Missing state or college priority deadlines can mean missing out on grants that have limited funding. Mark your calendar and aim to complete it as soon as possible after it opens. So, how do you actually complete the FAFSA? You'll find it online at studentaid.gov. The process begins with you and one of your parents, if you're a dependent student, creating an FSA ID. This is your legal electronic signature, so guard it carefully. The form itself will ask for detailed financial information. A huge change and a major pro tip for the current cycle is the direct data exchange. In the past, you had to manually enter all the numbers from your tax returns. Now, the form uses a direct data exchange with the IRS to pull in your tax information automatically. This dramatically simplifies the process and reduces errors. You'll still need to provide information about your assets, like savings and investment accounts, but the bulk of the financial data is transferred seamlessly. Once you've entered all the required information for yourself and your parents, you'll list the colleges you want to receive your FAFSA data. You can list up to 20 schools, and they will all get the same financial information. There's no need to prioritize them on the FAFSA itself. After you submit, you'll receive a Student Aid Report, or SAR, which summarizes the information you provided and gives you your Student Aid Index, or SI, which college is used to determine your aid eligibility. After you've been accepted to a college, the Financial Aid Office will use your FAFSA data to put together a financial aid offer, sometimes called an award letter. This is one of the most critical documents you'll receive, and you must read it carefully. It will break down the total cost of attendance, or COA, for 1 year. This includes not just tuition and fees, but also room and board, books, supplies, transportation, and personal expenses. Then, it will list the financial aid they are offering you to meet that cost. This is where you need to be a smart consumer. The offer will typically start with the best types of aid first, grants and scholarships, which are free money. Then, it will list work-study, which is money you earn from a job. Finally, it will list student loans. The offer might show a direct subsidized loan and a direct unsubsidized loan. Remember, as we discussed in previous videos, subsidized loans are the better option because the government pays the interest while you're in school. The award letter might make it look like you have to accept all the loans offered, but you don't. This is a crucial step that many families miss. You have the right to decline loans or to request a lower amount. You should only borrow what you need to cover your actual educational expenses. If you have savings, outside scholarships, or can cover some costs with a part-time job, you can and should reduce the loan amount you accept. To officially get your federal student loans, you need to take 2 more steps after accepting them on your award letter. First, you'll need to complete entrance counseling. This is a short online tutorial that explains your rights and responsibilities as a borrower. It's designed to ensure you understand the obligation you're taking on. Second, you'll need to sign a Master Promissory Note, or MPN. This is a legal document in which you promise to repay your loans along with any accrued interest and fees. It's essentially your loan contract. You only need to do this once for federal loans, as the MPN can cover loans you get for multiple academic years. Once these 2 steps are done, your school's financial aid office will handle the disbursement. The loan money will be sent directly to your school, usually in 2 installments, 1 per semester. The school will apply it to your tuition, fees, and room and board. If there's money left over, they will issue you a refund, which you should use strictly for education-related expenses. Now, what if the federal loans offered in your financial aid package aren't enough to cover the full cost? This is the gap that leads many families to consider private student loans. But this should be your last resort, after exhausting all federal options, plus scholarships, grants, and personal savings. The application process for private loans is completely different. You apply directly to a bank, credit union, or online lender. The application is a standard credit application, much like applying for a credit card or a car loan. The lender will run a hard credit check to evaluate your creditworthiness. For most undergraduate students with little or no credit history, this means you will almost certainly need a creditworthy cosigner, like a parent or another relative. A cosigner is someone who agrees to take full legal responsibility for repaying the loan if you cannot. This is a massive commitment for them, as it will impact their credit and finances. When shopping for private loans, compare offers from multiple lenders. Look at the interest rate, is it fixed or variable, as well as the fees and repayment terms. Remember, private loans do not have the flexible income-driven repayment plans or forgiveness options that federal loans offer. Borrowing them is a much riskier proposition. The entire application process, from the FAFSA to the final loan disbursement, is about being proactive, reading the fine print, and borrowing strategically. Your future self will thank you for taking the time to understand each step and for minimizing the debt you have to carry into your post-college life. Before we finish, a critical disclaimer: I am not a licensed financial advisor, and this is not personalized financial advice. The student loan application process and the specific details of the FAFSA can change from year to year based on federal and state regulations. It is your responsibility to consult the official government website at studentaid.gov and the financial aid offices of the colleges you are applying to for the most accurate and up-to-date information. Borrowing for education is a significant financial decision, and you should carefully consider the long-term implications before taking on any debt.